Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special guest for you today. He's an industry veteran, a Fintech Evangelist. He's a thought leader. Please help me welcome Lee Gillispie, channel partner at Innovation Refunds. Lee, welcome to the show.
Thank you, Michael. I appreciate you taking a few minutes with me today. I'm excited to get a chance to talk to you on the podcast. We've talked many times at conferences, meetings, etc., but now here we are. I feel like a star.
Well, it is great to have you. You have a wealth of knowledge and expertise. Before we dive into all of the cool things at Innovation Refunds, let's first start for the people that don't know you. And I'd be surprised if people don't know you, but you've been in financial services for a number of years. You can give a number if you want, I won't. But tell us about your background, kind of how you got in, and I think that's a perfect place to start.
That sounds great. So let's see. Been in the industry for about 20 some years. So a veteran of a lot of different wars along the way, up and down cycles. I mean, we've seen a lot of things together, that's for sure. Spent the first part of it with some smaller entrepreneurial-led companies. And then the last 16 plus, maybe 17 years, I've been with Fiserv on their lending technology side. That's where I've got to know most of the people in the industry, Michael. So what we did there was we worked with some of the Fiserv legacy loan origination systems. Everybody knows LoanServe, the servicing platform. And what I was really involved in was the technology that went kind of underneath it. It was a combination of we would take all of the files, the paper files that everybody had overrunning years and years ago, and many still do, unfortunately. And what we would do is digitize them. We would take data from them. We would take that and really check the quality of the paperwork. We do automated post-closing processes, and just kind of grew the need in the industry at that time. If you can remember back to when the CFPB first launched with all of those rules and regs and all of the context that went before it, kind of what Fiserv did, and I kind of led the charge of this with another team, is develop a solution that would meet the needs at the time that were new and different, as well as keep folks in compliance with some of the new regulations that they were having to deal with. So it was a great ride along the way. We grew the business up to about 25 million with a really large sales team, as well as a large staff of pro service folks that did the implementation work, the real work that takes place.
Awesome. All right. So you've got a wealth of knowledge and expertise. You've been in financial services for a number of years. You're now in the fintech side. We'll get to the company and exactly what they do in a second, but yep. There's an important challenge that you're trying to address in the industry. And I think the first and most important thing we can do on this podcast is first, let's explain to people, what is ERC, right? Yep. Talk to us a little bit about what is that, and then more importantly, why should participants in the lending industry be interested, right? Whether it's a vendor, whether it's a lender. Right. So let's start with what it is, and then let's kind of start breaking it down a little bit.
So ERC stands for, and this was news to me when I joined Innovation Refunds. I got a real education because I came at it from a fintech perspective and then kind of learned about the product after the fact. But what ERC really is, it stands for Employee Retention Credit. And it's a government program that came out of the CARES Act back in March of 2020. So put your mind all the way back to the COVID time, to the PPP time. And ERC started at the same time with the same legislation that PPP did. What it is an actual refund from the IRS for employers who've had employees during the times of 2020 as well as 2021. When it was first released in March of 2020, so when it first came out with PPP, everybody did PPP at that time because it was either or, PPP or ERC, all right? Okay. So everybody went to PPP because it was much easier to qualify, easier to get your money, all of those things. Over time, you'll remember as well as I do, all the different bills that were passed each step along the way, money. And December of 2020, so later that same year, they extended ERC, kind of made to different to March through 2021, so the year 2021. And they also made it so that you could take PPP as well as ERC. So, and then later on in December, of March of 2021, they changed it again to actually increase the credits that people could get and extend the ERC credit possibility to nonprofits. So it kind of evolved over through 2020 and 2021. And now it's available to any business. IRS says 70 to 80% of businesses qualify in the United States. And Michael, what I'm here to talk about today, just kind of get to the point, is in the years in my industry, I have met a lot of people and they have become friends, not clients. They're relationships. And I really like these folks and I want them to be successful over the long haul. 2023 looks to be a difficult year for a lot of the folks, especially for fintech folks who are young, they're small, they're trying to grow. Maybe this is the first cycle. And I'm just here to tell them to think about ERC, potentially, think of it as a lifeline to the business if they're really struggling, because it could be a significant amount of money and they're likely fully qualified for it. It's just a matter of getting in the process and seeing if they do.
So let's talk about that a little bit, right? You've already kind of framed it of a little bit of who's eligible, right? 70, 80% of the companies are eligible. It's for all of the challenges that people weathered during the COVID years. And as we look at the market conditions, especially the back end of 2022 and now predictions for 2023, there's still going to be a number of challenges that are in our industry. So whether it is a technology vendor that had a number of employees and saying, hey, we could get this credit, whether it is a lender that is looking for this credit, talk to me a little bit about how it helps the lending industry and kind of who are some of the people that you've worked with. You don't necessarily have to name companies, but name the types of organizations that you've helped and the impact it's had on their company.
Well, so let me start with this, is that our industry in particular really enjoyed they were boom years in 2020 and 2021. I mean, yep. Despite COVID, our industry reacted. There was a tremendous amount of volume, and we also had to deal with a tremendous amount of change. There were closures. There were, folks had to do e-signing. I mean, remote work. You remember how difficult it was, and how many, all the different things that our folks had to do to be able to get a deal done. So what a lot of folks believe about ERC is that, I have to have a revenue decrease during this time. It must have been a tremendous hardship. I would have potentially laid off employees. It's not true. You can qualify for ERC despite increased revenues. It's just a matter of it was narrating the changes that you had to endure and the difficulties that took place to be able to get to the end of the day. So that's one of the message I want our industry to hear, is that please do it anyway, even if your revenue's increased. Now, for the folks that we've worked with, let me describe that a little bit.
Okay.
We've done well over 100 different mortgage banks in terms of mortgage brokers and the banks themselves. They've qualified. They've actually gotten their payouts already. We've worked with fintechs themselves, so LOS providers and small ancillary technology companies to our lending industry. They're also they're eligible as well. And it's just a matter of, again, educating them to be able to take advantage of this refund.
Talk to me about what size refund are we talking, right? I mean, I got to jump through some steps. Is it really worth my time? Is I'm sure what a lot of the listeners are thinking. Walk me through a little bit of some of the ballpark numbers.
Well, this is the part that I was really surprised about when I joined the company, honestly, because I didn't know what to expect. But what we've seen as an average across the country for small to medium businesses is anywhere from $300,000 to $400,000 as in terms of a payout. So it is a significant amount of money. It is a little bit of work to get things prepped, but the other side of that is where kind of we come in. But once it's submitted, it's just the IRS reviews it, and then that's the amount of payout, the average amount of payout that our clients are seeing.
Right. And I think you've mentioned in some of our discussions, the average payout per employee is somewhere, it can top around $26,000. So people that are looking at how many employees did they have during those COVID years. And like you mentioned, people have to realize it wasn't necessarily losing money. It's what are all the things we had to do? We had to go to remote. We had to invest in technology so that we could handle our remote workforce. We had to get everyone on laptops. We had to up the bandwidth. I mean, there's so many things that people had to do as organizations to make this work during the COVID years, especially when a lot of things were shut down.
That's exactly right. One of the things that we've found is that is true and very important to add into the narrative is the fact that we couldn't meet face to face. Our whole industry is based on face-to-face meetings and relationships, whether it's from the real estate broker to all the way through to the servicing personnel who are doing that particular work. So when you can't go to conferences, when you can't meet with clients, when you can't do the things that we need to do in a normal occurrence of business, those are the things that are the negative impacts to our industry that qualify a business to be able to potentially get their ERC refund.
Exactly. All right. So we've talked about what the challenge and the pain point was. We've talked about, hey, there is assistance out there. Now let's talk about for the people that say, I don't know how to get all the paperwork organized. What's going to make this process easier? I think that's where you guys come in. Talk to me about Innovation Refund and kind of how you guys step in and step side by side with a number of these companies to help this process move along.
That's okay. Thank you. And I appreciate that. When I left Fiserv, I was looking for what would be, a true fintech, some kind of a startup. I have felt like I had enough juice for one more hard run at it. And I was really excited about, hey, what else is out there? I came across Innovation Refunds, who is the epitome of a fintech startup. Let me just tell you a little bit about it.
Okay.
The original investors were community banks and bankers. So that's where the money comes from. So about as credible source as there is. And then what they've built is they started from scratch. They hired the smartest people they could, didn't have any legacy iron to build on. And so they've built a data analysis platform to be able to take all of the documents and all of the forms that it takes to be able to qualify. And then what they'll do is they digitize everything. They analyze it through algorithms. And then once it's all packaged neatly, and this is packaged neatly using rules from arcane tax law. So this is not easy stuff. It really is. You need to do this very well. You need to have this accurate every step of the way. That's what the technology does, is it puts it together in a package so that tax attorneys and CPAs can actually look at what they need to look at, do the proper calculations, and then come up with the correct amount that actually maximizes the potential refund. And then the small business or whomever it is, the client gets to make the choice. Do I move forward or not? And then once they do, the package is submitted to the IRS and it goes from there. One last thing is it doesn't cost the business anything to apply. All they have to do is put the package together, look at what we produce, and then they choose go forward or not. We don't get paid until the actual payout occurs to the client.
Excellent, Lee. That's given some great insights. And I think, especially at this time in these market conditions, having these organizations have another lifeline to say, hey, here's a way that I can have some revenue come in. This is going to help defer some of our costs. Yes, we did have to invest in what we were doing. We had to invest in going remote. So it's nice to see and have someone on the show that says, hey, there's a way that we're helping people, and here's directly how that we can go about doing that. Before we wind down, there's two last questions I have for you. First of all, if somebody wants to find out more, what's the best way that they can get a hold of you? What's the best way that they can find out more about Innovation Refunds?
So you can look it online, but Michael, hopefully there's going to be a QR code on your site where folks can just go to NexLevel Advisors, click the QR code, and it's going to take them right to the initial application survey form. Just 10 questions real quick. Somebody keys it in, the business owner, whomever, keys it in, and then it gets submitted. What we'll do from there is analyze that information, do a quick follow-up, talk to you about the documents that need to be gathered, what the process looks like, and then there's a portal to upload. It really works just like that.
Excellent. And then Lee, as we're winding down, you've got a wealth of knowledge and experience. What do you see in store for the mortgage market in 2023?
I think I'm in the consensus with the rest of your guests that the first half is going to be difficult. It really is. However, depending on the rates and what the Fed does, there's still a huge need out there. They've not built enough homes. There's not enough inventory in the market. Folks still want to move to different places. Remote work's not going to change. And I would say that the second half is building back up in 2024. I would say it's going to be a really positive year.
Awesome. Lee, it was a pleasure hearing about all the cool stuff that you're doing. Welcome to the FinTech side of it. We couldn't be more pleased for you to join us this episode of the Fintech Hunting Podcast.
Michael, thank you so much for having me.
Thank you.